Let's bring in Gautam Shah, who's with us from Goldilocks Research. Gautam, good to have you with us here. Good morning. Thanks very much for your time. I think you had been calling for caution. I remember very clearly the last time you were on the program. The view was that perhaps we see some pullbacks from here. We've seen a sharp pullback. It's come, as they say, markets go up, what do they say, walking and come down an escalator. It's played out this time. But what from here? Are supports nearby? Or maybe with a bit of a bounce, there is more pain left? What's the roadmap in your mind?
Yes, good morning, Prashant. Yes, as the saying goes that you go up the stairs and you come off the elevator. I think that's been so visible over the last month and a half, because you had this lovely gradual rally over the last three and a half months. And with what has happened in the last couple of weeks, I think it's really caught a lot of people by surprise. But to be honest, the writing has been on the wall. The market was in a sort of a distribution phase around that level of 20,000. You had technical sentiment, global factors all coming in together to suggest that this pullback was coming. Now, the big question is whether this is just a temporary passing correction or whether this is a downtrend which will lead to a series of lower tops and lower bottoms. We believe that this correction is very different to the last 4 or 5 months, wherein the markets corrected, tested support and came back quickly. This time, I don't think we are going to come back quickly. Yes, we've fallen about 1,200 points, 18,900, 800, 900 area is an important support. You could see a bit of a bounce, but I don't think the bounces are going to sustain. So at high levels, the market will find selling pressure. 19,200, 19,400, 450 area will continue to act as a big ceiling. But I do believe that there is a lot more pain ahead before things can get better. And it's just discounting the global factors, discounting the elections, that are up ahead, and the kind of madness that you saw in the mid caps and small caps. So putting all of this together, I think eventually the Nifty is headed towards 18,400, 500. And because there is no leadership from any of the major stocks or major sectors, I think it's going to be difficult for India to come back very quickly, unlike the past.
18,400 or 500, you said, Gautam, right?
Yeah, I think that's been our working target, 18,400, 500 area, because that's where the next inflection point is based on a number of supports. Not to say that that's my worst case, but I think we could even go lower than that.
Gautam, hi, good morning. You've already given us your view on the Nifty, and the pain point for the markets really has been the Nifty Bank. That's a relative underperformer. Fundamentally, if I look at it, the profitability of the banking names have done well, but the stock prices haven't reflected that. Technically, though, how are things shaping up on the Nifty Bank?
Nigel, just to add on the Nifty, a 100-point move is 0.5%. I think there was a time many years back when it used to be 1%, and we used to be very excited about a 100-point move. To be honest, it's pretty normal now. A 200-point move is a 1% move.
But Gautam, after the kind of pain, it's like quite a few batsmen are already down, and then you have that middle order that comes in there, and at least they're scoring some runs, So in that context, it's not too bad. But you're making a point. Go ahead.
Yeah, fair enough. I think this pullback was anyway coming because yesterday was an expiry day. Just too much happened across the board in terms of pain points. But still, I think talking about the Bank Nifty, that's the problem area for the market, because even when the Nifty tested a level of 20,200, this was the index which really did not participate as well. And we've seen huge underperformance from a bank like HDFC Bank, despite all the talk around the fundamentals, which is obviously super quality, top quality. But the stock price just doesn't perform, and it's been in a sort of an underperformance phase for almost 18 months. Look at it on the ratio charts, which is HDFC Bank divided by the Nifty, and you will see that this underperformance is here to stay. So I think Bank Nifty is still a big problem. There are no signs of bottoming out. I think you are going to see a lot more weakness. Our near-term working target is about 41,500, but I do believe that the Bank Nifty eventually will go below levels of 40,000. So if that were to happen, I think the Nifty will also see a bit of a downtick. So I really don't see leadership coming from anywhere. When banks don't do well, Reliance is in a bit of a difficult space. ITC and L&T seem to have lost their leadership. IT has lost the plot a bit in the last 1 week. I don't see leadership. So I think at best this market can stay in a range, but there will be a lot of pressure from high levels, given the fact that the global scenario has changed quite a bit in these last 10 days.
And that is exactly what I wanted to talk to you about, Gautam. which takes us back to that point, right? I mean, Bank Nifty below 40,000. By the way, give us that lower target on the Nifty. You said 18,500 is near term, and then we might be prepared, or we might want to be prepared for slightly lower levels. So lower target on the Nifty, and then the global picture. Tell us more about that. What is the most worrisome indicator that tells you that maybe there's a bit of a global downturn that's coming?
See, I think we actually started getting cautious at levels of 19,700. To be honest, we put it out in our big picture report last month. And I think our working target is still at 18.4, 18.5. And I think that's a very important support. And we might not break that in a hurry. At least you will see a pullback from that level before we go lower. So I don't want to give any numbers below that. However, having said that, this entire move that financial markets have seen is global in nature. Till a couple of weeks back, financial markets were resilient to the geopolitical developments. And we all thought that why is that markets are, behaving so strong? And now it's actually aligning itself to the kind of news flow that we've witnessed over the last few weeks, which I think is only fair. I do believe, given the move in gold, given the move in Bitcoin, the market is a little concerned, and you are seeing elevated VIX levels, around the world. If you look at the world markets in general, the Russell 2000 in the US is near a 52-week low. The Nasdaq is at a multi-week low. Nasdaq was the star performing index for a couple of months, and people said that because of the Nasdaq, the entire US market will get bailed out. That's not happened. You are seeing cracks in some of the bigger stocks in the Nasdaq, whether it's a Tesla, Apple, Nvidia. You've seen a lot of weakness there. And Asian markets, look at a market like Singapore and Hong Kong, they have seen breakdowns recently. So it's looking synchronized at this point. And because we track the MSCI World Index and the Emerging Market Index very closely, I have seen cracks there as well. So I think the global equity market landscape itself is on the weaker side. This does not look like a plain vanilla correction. I think it will get a lot weaker before things get better globally.
Yeah, I mean, the Russell 2000, I think, is almost, if you define a bear market as a 20% fall, I think the Russell is already there. And take some of the points that you put out there. So, Gautam, so two buckets then. Which is the most vulnerable space in the market here? If you can name names, that'll be fantastic, useful for viewers. And on the other side, which are the relatively immune or even strong, right? I mean, actually, I sorted over the last 6 days or so, I sorted the NSE 500 group of stocks, and I came up with a few names which are actually between 10-20%. So where would you look for relative strength on the other side?
Well, in terms of weakness, I think it's pretty much across the board. If you look at most of the sectors, they're trading above the moving averages. They've all broken their support levels. Nothing really has held out. I mean, look at the kind of weakness many mid caps and small caps have seen. But I think the only space which I feel can really stand out is pharma, because traditionally it's known to be a defensive space which can do well in difficult times. Good chart. And I do believe that pharma, and to a certain extent, top quality IT will stand out. So these are the two spaces that we want to look at. And I think, the point which I'm trying to make here is the only reason why India might not fall as much as some of the other markets in the world is the 16,000 crore SIP money that comes in every month. Now that's sticky money that will keep protecting our market. But I think with the craziness that you saw in the mid caps and small caps over the last 4 months, there is a scope for a lot more weakness in that basket as well. So I think the advice to your viewers would be to stick with top quality, stay with industry leaders, stay with industry challengers, stay with companies with great fundamentals and institutional action. In case things get worse from here, which is my view, then I think those stocks and those sectors will actually bail your portfolios out.
Any stocks come top of mind, Gautam? Very, very valid advice out there. The SIPs actually have been really good, and everyone asks why the market's resilient. I tell them because it's because of you, because of your SIPs. So in terms of names, anything on top of mind, good quality, high pedigree, looking good on the charts, any names you could share with us?
Well, unfortunately, I don't have too many names apart from maybe a couple of names in pharma, which could be a Dr. Reddy's or a Sun Pharma or a Divi's Lab, which I think can really stand out. And in the IT space, maybe a TCS or an HCL Tech, which I see standing out. Maybe L&T after a bit of a correction. But let's look outside of equities. I think the bigger trade right now is gold and silver. I think we've been a big bull on it for a year now. And once gold starts trading above levels of 20,000, it might actually give equities a run for their money. And you might see gold at lifetime highs very soon, and maybe even levels of 2400, which is a 15 to 20% move from current levels. So gold and silver, we are actually very kicked, and we've been recommending our subscribers to actually top up in case you're taking profits or exiting in some equity positions.
Gold, gold, gold. Buy gold. It's anyway Diwali season. I think a lot of people will be very happy to take that advice, Gautam.
I think we know who's going shopping this evening.
Just checking. All right, Gautam, great talking to you this morning. Thank you very much for joining in. You have a great day, a great weekend, and we look forward to the next chat.